Okay guys, welcome back to me again, and then now I would like to read the article. But before that, don't forget to like, comment, share and subscribe. The title is China and US Agree Deal on Audit Dispute. Hong Kong auditors, Washington and Beijing have reached an agreement allowing US auditors to inspect China-based contents. The first step in the process that could prevent around 200 Chinese companies being kicked off American stock exchange. Samuel Siu, market specialist, TGS, CIMB, Singapore. This is seen as a positive first step. However, things are not fully cast in stone yet, as seen from the various sudden reversals in the past. KNG Securities Strategies, China Everbrick Securities, Hong Kong. I think if the agreement is finally to be reached, the market sentiment will keep improving, which will support the Hong Kong stock market, especially the technology sector. For the short term, the HSI will keep the upward momentum and may challenge the 21,000 level next week. For the midterm, the recovery progress of the Chinese economy will be the core factor for the stock market. Paul Leder, Miller and Chevalier, Washington, D.C., former director of the SAC's Office of International Affairs. Clearly, the Chinese authorities felt the pressure of possible delistings under the Holding Foreign Companies Accountable Act by explicitly tying the ability to maintain a U.S. listing to the PCAOB's ability to conduct inspection of a company's auditors. Congress imposed a cost on China for its long-standing refusal to permit the PCAOB to conduct inspection of U.S. registered accounting firms located in mainland China and later Hong Kong. The real issue is whether the Chinese authorities will now honor the deal and provide the PCAOB unfettered access to the auditors' work papers. For more than a decade, the answer has been no. But now that the threat of delisting is real, it looks like the answer from the Chinese authorities may be different. Winston M.A., a Jones professor, New Law School. This is a complaint issue, so the implementation of this framework in the coming months will be the key to the success of this complex cross-border setup. Marcia Ellis, lawyer at Morrison and Four-Star, Hong Kong. We expect that China's headquartered companies with sensitive data that haven't yet listed will favor listings in Hong Kong even if the PCAOB issue is resolved. In addition, listing in Hong Kong also insulates companies from what might continue to be a contentious relationship between the US and China in the next few years, even if the PCAOB issue is resolved. Thomas Hayes, managing member, Great Hill Capital, New York. A long time coming, this has been a hug overhang on China's ADRs, causing some of the higher quality business like Alibaba to be mispriced for some time as the deal moves forward and the fog is lifted. Many of those stocks will have significant appreciation, not because the business changed. Big tech platforms have weathered the pandemic and crackdown fairly unscathed fundamentally, but because the uncertainty has been removed, inviting investors back to group. Zhang Zihua, Chief Investment Officer, Beijing Uni Asset Management. This is definitely great news for US-listed Chinese companies, in particular the leading tech firm, as they don't have to worry about being forced to delist from the New York due to regulatory decision, and their failure can also be repaired. Okay guys, that's all from me. Thanks for watching me. Don't forget to like, comment, share and subscribe. See you next time.